Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. There have been, and still are, two main bullish Andrews pitchforks that you can see working here on my daily chart. The original late March, early July action, and the more recent early July to mid-September one. Both these are crucial in the running of this market and to the overall bullish incentive. In the original late March, early July pitchfork, the middle time, currently at 285 3/4, had shown back in August how good a resistance it was, and in recent days how good a support it had become. Then in mid-September, the lower time, currently at 294 3/4, of the newer early July to mid-September pitchfork took on the heavy lifting of the bullish incentive and support by commencing and showing the more recent and more acute bullish angle of attack. This is still doing magnificently. What we saw was the slower time raising the market such that 3 weeks ago prices moved up over the original older middle time. The first time this has happened since mid-August. As you can see, this market, like many of the other grain markets, was getting squished between two times back in October. And such a move higher, much like toothpaste coming out of a tube, was what eventually happened. Last week the market took on a stronger tone, punching up and breaching the 2008 high at 295 even, and fully surpassing target X in the 288.5 area. This was the original target for the July to September bullish halfway hesitation pattern. Now, I remember discussing this as originally it was a huge ask, and the actual target X went off the top of my daily chart when I first suggested it and drew it. Yet with these capable bullish pitchforks, it became an easy target to achieve. Now, last time I had some concerns that once prices reach target X, they might turn around and fall back off. And I have to say, despite last week's weekly key reversal up, that early this week it looked a bit as if we might go that way. However, we've since recovered and made a new high yesterday, just under the all-time high of back in 2007. Even this one has exhibited issues, as it looks like it might possibly be a combined bearish bear spike and gravestone doji right at the height of the market. Yet with all that, I will leave you something I have said now for many weeks. Please continue to keep in mind the bullish March to July Andrews pitchfork is still very much intact, and until that is broken, redesigned or reassigned, then it will rule the overall bullish incentive. Plus, this is all taking place in the shadow of July's monthly key reversal up. London UK feed wheat. Okay, so I'm back to using a line chart for most of the action here. That's okay, it sometimes helps with the patterns. Anyway, the current move higher can be traced to the market stabilizing just under the then short medium moving average, currently 204 even, amid the undergrowth of lesser Fibonacci levels at 183.45, 182.20 and 181.60 back in September. The rise was somewhat spectacular and uncalled for as the market made three gaps within 2 weeks and yet still continued to move higher. Up through the various resistances, notably the long moving average, currently 197.10, before a strong kick upwards pushed prices up over the old March 2013 high at 205.05. This caused a further attack higher. Eventually, that finally cracked the March 2013 high at 215 even. 7 weeks ago I said, and I quote, "All this action has allowed me to draw a July to September bullish Andrews pitchfork, and it is the lower time of this pitchfork, currently at 222.30, that has recently shown the bullish angle of attack. Thus the middle time above, currently at 238.85, is the main rising bullish resistance beyond the March 2013 high. It is as I've said elsewhere, until this bullish Andrews pitchfork is broken, changed to a bullish shift pitchfork, or reassigned and retired into something else, then it will drive the bullish incentive higher in this market." End of quote. Thus we come to 2 weeks ago when the market's rise stalled and dropped down below the lower time of the bullish Andrews pitchfork, and for the first time since early September it looked like as if the market may have done enough on the upside. The reason for this apparent change? Well, I put it down to achieving in the prior week target X. Now, I had previously detailed target X for some 5 weeks ago, and I quote, "One final thing to add, and I've expressed this last week here and elsewhere in some of the other grain markets which have shown a similar aptitude, is to look at the July to date action as a bullish halfway hesitation type pattern. With this in mind, I had previously placed a prospective target X in the 213.15 area. This is not as insurmountable a target as elsewhere, but let's not kid ourselves, it is still a big ask, and I've not altered it a bit from last week." End of quote. Well, this big ask became a big reality. However, prices did not stabilize there. Instead, it seems to have prompted some insecurity and caused the drop 2 weeks ago and exit below the lower time. However, this move marshaled the bullish forces last week such that prices not only pulled back up to, if not in, the bullish Andrews pitchfork, but in the process created a weekly key reversal up last week. It was not a perfect recovery, as at the start of this week prices again dipped below the lower time, but they have since recovered enough that we're back fully within the bullish Andrews pitchfork and close to challenging the all-time high in 2012 at 227.30. What these moves have done is caused me to draw something I have been putting off for many weeks, in case I jinx this market by even mentioning it. However, the time has come to draw a bullish shift pitchfork for the same July to September move to accompany the original bullish Andrews pitchfork. Thus, you can see it as a shallower pitchfork on my daily chart above, with the market moving up between the middle tine here, around about 215.10, and the upper tine above the market, and above the all-time high as well, and that tine is currently at 227.90. This upper and middle tine rises by about 40 pence a session, so it's worth now keeping an eye on both these tines as support and now also as immediate resistance beyond the all-time high. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.